and thank you for holding this hearing. Mr. Becker, at Silicon Valley Bank, you were concentrated in a highly volatile interest industry at the time when things were looking rocky in many of your clients' businesses. You didn't just have a lot of uninsured deposits, you had mostly uninsured deposits. And those startup tech clients were in a position where they needed to burn through cash faster than it was coming in. In recent years, your bank has grown rapidly, but investments your bank paired with that growth may have been safe assets, but they were going to rapidly lose value with interest rates increases that the Fed made clear and everybody in the industry knew was coming. The Fed had clearly signaled to any banker, to any investor, to anybody paying attention that to get inflation under control, they were going to raise interest rates. And in fact, you even sat on the San Francisco Fed's board of directors during that same time period. And the chairman of your board came from one of the big four accounting firms. Mr. Becker, if you couldn't see the real risk coming, what were you doing leading this bank?
Senator, when the decisions were made to make the investments in the government-backed securities, that was in 2021 mostly, and that's when inflation was stated by the federal government as being transitory. That was the case all the way up until the end of 21 when we had already invested the majority of those securities in government securities.
So you're in a situation where your bank increased in value. I will say exponentially. You could debate that, but it increased in value very quickly. You're in a situation where you're a high portion of your deposits weren't insured by the FDIC because they were over the limit. You were in a situation where everybody saw the economy moving forward, coming out of a pandemic, a lot of pent-up demand, and quite frankly, we saw Congress and others take actions. Your clients were highly concentrated in the tech industry. You invested a large portion into government paper. You had regulators that were telling you that you're going to have to change what you're doing or you're going to go broke. Maybe they weren't that blunt. Maybe they need to be that blunt. And it is my understanding that a bank in your size, the regulators literally have an office in your bank. Is that correct?
Senator, as previously discussed, just due to the pandemic, most of the engagement was virtual.
So you're saying that the regulators did not have an office in your bank?
Most of the engagement was virtual, and to my knowledge, they didn't have an office. That probably would have changed as we were coming out of the pandemic and people were coming back to the office on a more regular basis. But at the time...
When was the first time that the Fed or any of the, I believe you had 3 regulators, right? When was the first time they notified you that you had problems?
Senator, I think about the matters requiring attention or the feedback we get from regulators.
Matters requiring attention.
We're getting that on a regular basis. We're engaging the regulators, and we are being very responsive to the feedback they were giving us.
So what you're saying is that, no, I would disagree that you were very responsive with the feedback they were given. Did you read the Fed report?
I did read the Fed report.
Okay, it shows that the regulators identified deficiencies, and then quite frankly, you didn't proceed with those deficiencies. I don't necessarily blame you for that, by the way, although I do. I blame the regulators. The regulators should have been standing on your front doorstep not allowing you to go through the door until you fix these problems. So we'll take that up later, because I don't want the regulators to overreact and pinch all the folks that are following the rules to like happened in '08. But the fact of the matter is that it is very hard for me, and I am not in the financial industry. My folks, when I was raised, says if you can't afford to buy it, don't go to a bank. So I've not had a lot of work with a bank. But the truth is, it's hard for me to understand how somebody who sat on the Fed, somebody who is in tune with what's going on in the economy, somebody that had regulators telling them you've got stuff that has to be dealt with here, didn't take the kind of response that should have been taken. Now, whether it's you as president of the bank or whether it's people on your board of directors, I don't know what happened here, but the fallout of this, by the way, the fallout of this isn't just Silicon Valley Bank going down. It's the fact that we're going to have a lot of banks out there that are going to get the screws put to them because you guys didn't react to the recommendations that were made by the Fed and hopefully other regulators, but absolutely by the Fed. And I just don't understand how for 3 years this went on and nothing was done. And it ends up where that bank no longer exists, right? No longer exists.
It does not.
Thank you,
Mr. Tester. Senator Daines from Montana is recognized.
Mr. Chairman, thank you. I wouldn't trade you guys places here this morning, I can tell you that.